This is the pound Aussie on the 5 minute, and we have a triangle that's set up, and I've got an incredibly poor reward to risk here because when I entered I actually got slipped. Nevertheless, what we have here is a directional move. We have at least 2 touches along the top here, we've got at least 3, and you can clearly see the market is coiling up like this, and 3 touches along the bottom. I actually used this higher high, higher close 5 minute candle as the entry. Because this is a lower time frame pattern, then stops go below the second test. This would be the first here, this would be the second, so it's below the lowest structure point. And typically with these patterns, the lower time frame patterns, we tend to break to the middle before turning and then rallying around for targets. Now it does mean then I've got a risk here of 30 pips for a reward just of 17, and looking at playing for that 127 fib. If we do go out to the 60, we are in structured consolidation. So you can see here that we've come down for another test, and it looks as though that we could be working our way back up to this level. Not something I'm playing for. I would have played for a second target up to this level, but because my reward to risk is so poor, then what that actually means is that if we come up to here, hit targets, I move to break even to here, the market's only got to turn around a few pips to stop me out for that break even trade. So if I'd got involved here, it would have been a different story. But like I said, I got slipped. As soon as I entered, the market just jumped the wrong way. So we're in this anyway, 30 pips of risk for 17 of reward. We're back for the update on this trade, and what a shame. We actually came just a couple of pips from targets. We actually hit my take profit line, and as we got up there, I moved to break even, and I'm out for break even. What a real shame, but lovely triangle. Just to run through this though, you know, look at what we did. We actually broke down, I said, to this center level here. Did we actually hold that level? No, but we actually came down to it, and that was the turning point. And I think what's really important is that when you go ahead and test these patterns, you're not just testing the pattern, you actually need to analyze the pattern and watch how it moves, because when we enter these trades, ultimately there are 2 outcomes. One is that it goes up, the other one is that it goes down. But if you actually watch how price moves between those levels, then for me personally, I know that on these lower time frames, structure doesn't hold very well, and we typically come down to this center level. So that's why I always want my stop down here. Now what that also means is that you can actually then wait for price to come lower like this to your area where you think it will come to, then wait for a higher high, higher close, and use that as your entry. And as a very minimum, what it does is it provides, it removes the fear out of trading, and it allows for faith to take over, because you've done your back testing, you have faith in the pattern, in your back testing, but it's just fear that sometimes holds you back, and that's a way of keeping you calm throughout these trades. So very good trade, even though I got slipped an absolute fortune. We're out for break even. What a shame.